We bought our first short-term rental investment property in San Diego in 2017. It was a completely new undertaking for us that involved rehabbing, furnishing, setup details, and then navigating this new and exciting venture as Airbnb hosts.
And then for the next year and a half, we learned the ropes. We were stumbling a bit along the way, but we managed to keep guests happy, occupancy was high, and we added a good amount of money to our bank account.
In 2019, we decided to buy our second short-term rental property. We couldn't afford another duplex in Mission Beach, but we looked all across the US and finally landed on Scottsdale, Arizona.
Home prices were in our budget there. It was only a 6-hour drive from San Diego, where we were living at the time. And one of the biggest things is the regulatory aspect for short-term rentals was already settled and supported at the state level.
Setup of that property went smoothly, although looking back, we did probably forget a couple of amenities that we would have included now. But ultimately, guests love the house, and we still get really great reviews even 4.5 years later.
The problem isn't getting guests to love the house, it's getting guests to book the house. Year over year, our revenue has declined pretty significantly since 2021. And then this year, we've had a couple multi-month streaks with only one booking per month.
My schedule's wide open, Helen.
There are a few things that we know of that we think are setting our property back, but one of the biggest things is that the number of short-term rental properties in the greater Phoenix area has grown by 400% in the last 5 years.
Competition is high, and what's especially important here is the concentration of rentals close to Old Town Scottsdale, which is one of the flagship destinations, has just exploded. We're not far away, about 15 minutes from Old Town, but we're also not right there.
The idea of potentially selling the house has been at the back of our minds, or sometimes the forefront of our minds, for some time now. But we have shared before that the house has appreciated by 100% since we purchased it. So that takes a little bit of the stress away and makes us not want to instantly go out and dump the property.
But we also wonder if we'd be better off moving our investment to a different market. So today we're going to lay that all on the table for you.
If you've watched any of our videos before and you found them helpful, then we have a favor to ask of you today. So what we're asking is that you watch this video in its entirety and then give us your honest opinion at the end with a comment down below saying either keep it or dump it.
You can elaborate why if you want, but at minimum, just give us your answer whether to keep it or sell it.
Be nice. We're pretty sure we know what we want to do at this point in time, but we're also curious what you would do if you were in our situation. So we're going to be going over year-by-year earnings since we purchased the property in 2019, month-by-month earnings for this year, 2023, and our projections for at least early 2024.
We're also going to share some plans for some small improvements that we're going to make as we make up our minds whether to keep the property or get out of town.
All right, let's get started. So this property, we named it Saguaro. It is a 4-bedroom, 2.5 bathroom house in Scottsdale, about 2,100 square feet. And in the backyard, we have a big pool, and we also have installed a petting green and a kids playground.
It's in a really quiet neighborhood, about 15 minutes north of Old Town Scottsdale, and we love coming here with our family, and we host a lot of families as well.
So now that you know a little bit about the property, let's get into the earnings.
So in 2019, we didn't buy the property until summer. Our first guests were in August, but for the remainder of that year, our total earnings were $24,750.
And 2020 was an odd year as well, as you're very aware, but we also didn't see the big influx of summer tourism in Scottsdale that we saw in the Palm Springs area, where we were getting a lot of people driving out from LA and Orange County. But at the end of that crazy year, our earnings came in at just over $72,000.
2021 was a great year, and we had total gross revenue of $112,540.
And in 2022, our total gross earnings for the year were $87,425, or about $25,000 less than the previous year.
It's true we're losing money.
We knew that 2023 wasn't going to be as good as 2022, but we were surprised at how bad it's been.
In January of this year, we took a whopping 2 bookings for a total of 11 nights, not including 2 nights of a carryover booking from New Year's Eve. And our total earnings for that month were $4,620.
We then secured secured a month-long booking from mid-February to mid-March for 30 nights. This was a great stay, and the total earnings for that were $19,500. That one booking kind of saved us for the year, actually.
For the rest of March, we filled another 12 nights with 2 bookings. The total earnings were $8,124.
April, we had 4 bookings for 12 nights total, and the earnings were $5,543.
In May, we took 4 bookings, 18 nights total, and our earnings were $6,682.
June earnings were $1,652, and the July earnings were $1,451. It hurt.
August was slightly better. We took 2 bookings for a total of 15 nights, and the total earnings were $4,092. And then September was an absolute nightmare with 0 bookings.
In October, we had 3 bookings for 9 total nights, and total earnings were $3,434.
Now we're in mid-November, and it's looking like we are going to close out the month with 2 bookings, one that just came in this morning. So a 2-night booking that came in this morning, and then a 14-night booking starting next week. And our total projected earnings for this month are $4,937.
And our December calendar is empty. Hard to believe, really.
I won't lie, it's been a tough year.
We're pretty hopeful and optimistic that we'll get something at least around Christmas or between Christmas and New Year's. But if nothing comes, then we're looking at total earnings of just over $60,000 for 2023.
I'm confident that we'll get at a minimum something, like Steven said, around Christmas, which will add a couple thousand more dollars to that total, hopefully. But even then, realistically, we're looking at probably closing the year with around $65,000 in total revenue.
And with annual expenses right around $55,000, makes our margins really thin.
Yikes.
This year, the only real upsides to owning this property are, well, 1, getting to use it ourselves, 2, the property management fee that we collect from our partnership, and the appreciation in the house. Comparable home values in our area have gone up by about $400,000 since we bought.
The idea of selling or doing a 1031 exchange into another market has been on our minds all year. And if we do end up selling, we do know exactly where we want to reinvest. But with a low interest rate loan and the equity appreciation that we've seen, and the fact that we're not losing money, has us kind of thinking that maybe it's an asset we should hold on to.
Then in September, when I was at the STR Nation conference, one of the speakers told me that we need to get rid of this property fast. So the way this conference works, there were 2 tiers of tickets. There's a general admission, and then there's a VIP. And at that first night VIP party, we were on a boat in the middle of San Diego Harbor, and I look across the boat and I see Bill Faith.
We followed Bill for a while, and we're really impressed with what he does with marketing. And we knew that he's just knowledgeable in general about the short-term rental market and has a good overview of all the markets in the US, especially big metros like Scottsdale.
So I had texted Steven from the boat because he wasn't with me, and I said, Bill Faith is here. What should I talk to him about? And he replied with 1, ask him about running paid ads for individual properties, and 2, ask him about the Scottsdale market. What are his thoughts on it?
About an hour later, I got a text back from Kylie saying Bill says dump the Saguaro property. Saguaro is what we call the Scottsdale property.
Selling.
So I had told Bill all about what's going on with that property. I told him when and how much we bought it for, how much equity we have in the house now, what our numbers are looking like this year. I also explained how we've generally been okay with the house performing a little bit lower than we had hoped for it to, because we are liking the appreciation and getting to use the house and things like that. But he almost interrupted me and just said like, nope, sell it, get out of there, in a nice way.
His point of view was that why would you keep your money tied up just for the appreciation when you could do a 1031 into another market, have cash flow and appreciation in that market?
That makes a lot of sense. It makes sense. So I left that conference just pretty much convinced that we needed to sell Saguaro. We do have a partner in this house, so it's not like we can just go and make this decision by ourselves and go put it up on the market for sale, but it made sense.
That was all true, and we had that viewpoint, and then we went to another conference about 2 weeks ago, and someone there who we also really respect had a bit of a different opinion.
Now what do we do?
If you follow us on Instagram, then you probably saw that we just spent a few days in Houston at Rob Built's HostCon. It's our second time at this conference. We love it. We're definitely going to be at the next one too. He really brings a good group of people together.
In his keynote, one of the points that Rob was making was that so many people are itching to add to the number of doors in their portfolio. They're doing this instead of trying to reinvest into their existing properties and really optimize the revenue from them.
And this also made so much sense to us. So maybe instead of selling, we should just be reinvesting back into the property property, optimizing it to fully compete with the other properties around us and see how we can improve.
Last weekend, we took a trip out to Scottsdale. It had been a few months since we were there last, and we just wanted to check up on the house and do some restocking.
Not a ton of restocking because we haven't exactly had a lot of booking activity there over the past few months, but there were a few things.
From the restocking and checking, we had a good time enjoying the property, which is one of our goals for investment property ownership. We do really like having cool places to visit.
And some of Steven's friends from Iowa were actually in Maricopa at the time, just happened to be there too. So they drove up, we had a pool day with our families, they stayed over the night, and it was a lot of fun.
It was just a reminder that while cash flow is important, it's not the only thing to consider.
And then also over last weekend, we spent a lot of time just walking around the property and thinking of ways that we could improve it. We know that when guests get there, they love it, but what could we add from a marketing standpoint that would draw more attention to our property?
Rob has a big mansion style property in Scottsdale, and he reinvested by adding a pickleball court. Well, actually 3 pickleball courts, and I wish we could do that, but we just don't have the space.
We've kind of maxed out the backyard as is. We added a putting green a couple years ago on one side. We have the kids' playground on the other side, and then the pool area. So there's not really space for us to add more big stuff like that, but we did come up with some fun ideas to just bring some more life to the space.
Looking at our competitors, and some of them are doing well, it's tempting to go with really bold styles and theme out the place completely. But since we're still on the fence about whether or not to sell, we don't want to hamper our sort of resale ability of the property by, going all in on some super themed out place.
We do thankfully have a couple of really strong bookings next spring, including those month-long guests are coming back again. So another $20,000 booking for that month, but that is not till the spring. So if we can reinvest just another couple $1,000s now and try and get as many more bookings as we can until then, until we maybe decide to sell after that, we think it's worth it.
We plan to take advantage of Black Friday deals and Cyber Monday deals.
All the deals this month.
They're going to be coming up, and in next week's video, we'll share with you all of our favorites or best deals that we found for your short-term rental. We're also going to share all the things that we found that we think will increase the marketability of our Scottsdale properties. Saguaro.
Black Friday isn't just this single day flurry sale that it used to be. It's really turned into more of a month-long event. So last night we actually started a blog post of all of these rotating deals that we're finding throughout the rest of the month. And you can access this blog post by going to the link in the description box below or going to arrivals.com/Black Friday.
Deals seem to be coming and going weekly, if sometimes not daily. So we're going to keep this list up to date when we find new things or if availability goes away. And the closer we get to Thanksgiving and actual Black Friday, the more deals that there's going to be.
So if you're in the market to add anything new to your short-term rental property, be sure to check out the list, check it twice, check it often, because some of these deals won't last long.
Make sure to leave us that comment down below about what you think we should do with the Scottsdale property, whether to sell it or keep it.
Thanks for watching, and we'll see you in the next video.